Hey guys, in the last video, we talked about a very simple trend following strategy. In this video, we're going to actually use real world examples on a live trading session here on QQQ about how to take certain positions, why to take them, and how to think about them once you're in them. I love giving practical examples. It doesn't help if I'm doing hypotheticals and just saying, hey, hypothetically, if I was in this, that doesn't help anyone. What does help you is showing how a trader would think about a trade, why one would take a particular trade or not. And then after you take it, that's where the real work begins. Anyone can take a trade. I mean, anyone can open up a broker, put $2,000 in it, and then blow it up, right? It's the easiest thing in the world to do that. Easiest thing in the world for you to go long or short in the market. The difficult part is after you actually take the trade. That is where the work is actually done. Cool. So we're going to jump on here to this chart and we'll decide together whether we want to take positions or not, and then why yes, why no, and how we're going to apply all these principles, right? I'm going to apply all these principles about how to think about a trade once you're in one. So let's dive into the chart. Okay, here we are, QQQ, 15-minute time frame. Lot going on, right? Usually there's a lot going on in the market. There's price action all over the place. If you are a true price action trader and you can read this right here and you know exactly where the pivot points are, you know where the demand areas are, if you can do that, that's great. I need help, right? I definitely need help. So we're going to apply the trend following tools that we were discussing in the other video. Let's just make this real simple. Okay. Let's make this really, really simple. Let's use the moving averages here. I'll use the 5 and the 21 cross. So the 5 and the 21 is going to be red dot for short position and then white dot for long position. Sometimes what we have is a lot of shelving, right? Shelving is just part of trading. You're going to know that as chop, right? That's the universal language for just nothing happening in the market. So that is the number one. This is the trade killer, right? This is like when nothing's happening, shelving is like the worst thing in the world. It really is. You're in a trade, like let's say similar to right now, you're in a trade and nothing's happening. My goodness, like how can we avoid this as much as possible? You avoid this by using the higher time frame. That's what it is, okay? You avoid this by having the mental acumen and the capacity to recognize, maybe this ain't the spot. You don't have to go into the 4-minute, 5-minute time frame. I cannot emphasize this enough. I really, really can. I hope you can get this through. I hope I'm not talking at you, but actually talking to you. I cannot emphasize this enough. You do not have to be in a trade at any given point in time when the market is open. You do not have to jump into the 3-minute time frame and just say, I'm going to be taking positions left and right and then taking 13 trades even before the market opens. You don't need to do that. What you need to do is focus on the higher time frame context. You want to build from top to bottom. This is how this works. Top meaning higher time frames, bottom meaning lower time frames. So let's start building upon those pictures using the one simple indicator, homie. I'm not even overcomplicating this. The moving average strategy, you need 2 indicators. We're just using one. We're just literally using one. Let's go to the 30-minute time frame. On the 30-minute time frame, where's my entry? Where's my exit? It's pretty simple to figure that out. Entry is going to be right here if I'm taking a long. This is the market that opened at 6 o'clock in the evening on Sunday, so we're not going to consider that. But here, 4 o'clock in the morning, if you want to wake up and trade that's fine. Using a trend identifier tool and the settings that I showed you guys in the other videos, right? Let's just move that to 2. Let's tighten up the bands a little bit. If I'm going to be using these settings, then it's pretty clear on where it is I'm taking an entry or an exit. Literally very clear. If you want to use this in tandem with any VWAP indicator that you use, that's perfectly fine. So that VWAP, right? Now you're using 2 indicators. That VWAP will tell you if you are institutionally overbought, oversold. VWAP is an excellent strategy. Excellent. So how am I going to apply my psychology on these positions? There is no substitute, not one, no substitute whatsoever that will, mathematically speaking, that will supersede risk-reward principles. It doesn't exist. It will never exist. If you're going to be taking a long position, but Sage, it seems like this run happened right around here. Stick to your strategy. If you have a strategy that can identify within 1 or 2 candles where the start of the run is, by all means, please use that, right? Don't use what I'm showing you here. Use your strategy if you have something that's better. But for the love of God, follow the principles that I'm giving you. If you're going to be taking a risk-reward trade where you can identify the entry here, why would you set your stop loss all the way back here? It don't make sense, right? The risk-reward is horrible. It's literally horrible. Why would you do something like this? You want to apply all the it doesn't change. It doesn't change what asset you're you're trading under. If you're trading currency pairs, if you're trading equities, if you're trading futures, options, whatever, it doesn't matter. Make sure that this number favors you, the trader. If you trade at a 2-to-1 risk reward, 3-to-1, 4-to-1 risk reward, you don't have to be right all the time. You really don't. I talked about that for hours in the other technical analysis videos. It is so important for you to understand that. It don't matter what indicator you're using, right? This is all psychologically based. All that work, all the work that you do on identifying entries, exits, all of that doesn't matter. That once you're in a trade, if you don't apply the right principles and you don't have the psychology to back it up. So let's go back here to this example, right? You have no idea. You have no idea how sometimes I'm talking to people and they're doing the exact opposite of what I'm talking about. They're like, I'm going to move the stop loss lower. I don't really have a profit target. I don't have a trend following tool. I'm not really using the moving average. That's just crazy to me, man. You're not following the plan, right? You're literally deviating from the plan. Let's try here the 15-minute time frame, because most of you are going to be using this time frame or just a tiny little bit lower. My entry is right here. I mean, it's pretty clear where the entry is. So let's move that down just a little tiny bit further. Let's remove the drawings. Let's take my long position tool. How am I going to psychologically prepare myself for being in this position? Well, some of you are going to be like, well, I don't want to be in a trade for 4 hours. That's cool. Then use the shorter time frame and completely ignore what I'm telling you. If you want to trade how I'm trading, if you want to put on positions and catch 2, 3, 4, 5, 600, 800 point moves in the market, trading futures, NQ, or larger moves in the market like I constantly do what it is that I'm telling you. On this situation, right, risk reward, it's 3.8 to 1. I'm just going to set it at 2 to 1. If you have your own predetermined levels that you watch, that's okay. No problem. I usually have that here, right? I have a whole bunch of them. Now, aside from that, follow the trend. Follow the trend, right? If I put on the 5 and the 21 moving average, if I just plot that on the chart again, the 5 and the 21 gave me a cross just one candle later than what the trend magic did. Whatever trading system you want to follow. Psychologically speaking, whatever system that you use, the psychological component, it don't change. It's the same thing. Okay, it's really, really not going to change. So here, all I'm going to do is I have to have proper risk reward management. And how do you do something like that? If you're going to use the moving average, I'm just going to use this as an example. I'm going to use this as my stop loss and I'm just going to follow suit with that. But now you have something additional, right? You have an additional indicator that is ATR based, which is not moving average based. And it's going to tell you, well, it kind of looks like you can stay into the position. So this and this have almost a synchronous relationship, okay? This has everything to do with what you're thinking about and your emotions while you're trading, because trading is all psychologically based. So in this situation, it would have worked out. But what if it doesn't work out? What if I take a low quality trade and all of a sudden it starts breaking in the other direction? Well, you have to be prepared for that. You have to be prepared for, okay, was my risk reward there? Did I have a good probability on my trade working out at a 2 to 1? If the answer is yes, then you shouldn't be worried. You just shouldn't be worried. What happens if I take that particular position and then all of a sudden I start moving a little bit lower? Well, your stop loss is holding you in place. So what is the distance from here to here, right? How much am I willing to risk on that particular position? Looks like I was willing to risk almost 0.2% of the trade versus how much potentially I would be seeing here. So the risk reward substantially outweighs whatever the risk was. You see what I'm saying? The same thing here for short positions. If I decided to take a short position, just speaking here, on the 5 and the 21 cross here lower, this doesn't count. I'm just using it as an example, right? It's the closest thing that I have on the chart. If I'm going to look for Confluence, both on the moving average and on any trend following tool, if you have one that's better, please use that, no problem. If I'm going to also throw on the Super Trend that we were talking about in the other video, if I have Confluence, all three of those things, by all means, fire the trigger on the trade. The only thing that needs to apply, let's remove the drawings here. The only thing that needs to apply is if you're going to use the risk reward calculator, make sure that you don't have an egregious risk reward. Why are you going to set it all the way up here, right? Keep it tight. If you want to use the ATR band, if you want to use the shelf as your perceived stop loss area, by all means, dude. By all means, you can definitely do that, all right? So this is what we're talking about. This is just one example. I can literally give you a million of them, right? This is just one very clear example in a real trading session on how I can use these tools, but it won't matter if I'm not applying proper trading discipline on every trade that I take. Hopefully I've been able to make that clear.